Okay, Patrick Ray here with Canopy Boulder, and I want to thank you for joining our webinar on due diligence in the cannabis industry. This is the first time we've ever gone deep on this topic for investors and folks looking at investing in the cannabis industry. So what I want to do is make sure it's valuable for you. So if at any point during the presentation you have a question, please jump in and type that question into the chat. Our team is monitoring the chat, and if I can't get to the question immediately, we'll either get to one of my team members or we'll get to you in Q&A. One thing I do want to say is that what we're presenting today is just information. It's not advice. It's not legal advice. It's not investment advice. This is just information. And we see the smartest investors working with professionals, not solo. So through this informational presentation, think about what this means to you. Every slide, every point, how you can assemble a team or tap into a team to make the smartest investments that you can. One other disclaimer, I only know, and we only know what we know. This is a fast-moving industry, ever-changing. What we thought was the norm and the way to do it yesterday can change tomorrow. So with that in mind, we're going to talk about 8 things today. We're going to talk about a little bit about Canopy Boulder. We're going to talk a little bit about the cannabis and the cannabinoid industry with data from BDS Analytics, one of our portfolio companies, which will be a recurring theme. We're going to talk about before you begin and understanding what the industry looks like and what you should know, how to generate deal flow, your first cursory review, your second strategic review, going into deep due diligence and common gotchas and face palms, all right? So let's get into it. So first thing first, the cannabis industry is one of those opportunities where a lot of investors have a fear of missing out, but they feel sometimes at a disadvantage to other more experienced investors who come from industries and are looking at this opportunity in this industry with maybe not the most pure eyes. And there's people out there that you got to look out for in this industry. Remember, this is an illicit, historically an illicit market, right or wrong, it is what it is. In addition, the industry is changing rapidly. So you want to avoid being in a situation that changes 180 degrees while you're in it. Don't pick a business that doesn't have a massive exit valuation potential. That should be your first review because it's hard to do this for peanuts, let's be honest. And finally, as an investor, you got to be honest about your commitment level to due diligence. As you'll see, it's a pretty detailed process. And surrounding yourself with the right people is one of those ideas that we definitely support. This is industry experts, accountants, lawyers, other investors who are going to help you share the workload. But at the end of the day, I'm going to encourage you to consider investing into a fund that's professionally managed. They're going to have better deal flow. They're going to be able to get better investment terms, and they're going to have more contacts after the investment and ways to help the portfolio companies than you will likely have on your own. Because at the end of the day, what we're trying to avoid here is the face palm, right? Making the mistake and missing something that you feel you should have seen before you made those investments. At the end of the day, you want more winners than losers. No one bats 1,000. And again, all of this is to essentially avoid that grand face palm. So really quickly, let's talk about Canopy Boulder. We are an investment fund, a venture capital fund, and business accelerator in the cannabis industry. We have focused our efforts on ancillary products and services and CBD and hemp. So picks and shovels and the legal part of the cannabinoids market. So by the numbers, we raised 7 funds, about $15 million from about 150 investors, invested in 106 companies since we made our first investment 5 years ago. That's about 130 investments because we have done follow-on rounds. These companies have gone out and we've invested and raised over 75 million from other investors, served over 20,000 customers with the help of 200 plus professional mentors, a lot of them that we've introduced them to, and created value for their companies of over 250 million, and that number is growing. Here are some of the examples of ancillary products and services investments, everything from sustainable packaging and in-store marketing to robotics, data, and plant science. As I said, we've also made investments in CBD and hemp. Most of these investments have been in branded products, and I think we'll talk a little bit about why in the future. Who does this work? It's a small but mighty team of core industry people. Myself, I come from the natural products industry, VC, M&A, sell side, buy side, but I also operated businesses and have worked with early stage companies. Celia does investor relations for us, and she's also our marketing manager. She has, again, industry expertise, having worked at Cerna, and is good, well, got very well versed in the nuance and the subtlety of the industry just through the, number of repetitions that she's seen through the investor fund here at Canopy Boulder and the accelerator. And then Bob Goodman manages our accelerator. He's a 6-time startup CEO. He's been there and done that. He has an intuitive sense for what is right and what's wrong. And when Bob speaks, it speaks volume. So what is the Canopy Boulder program? Its core fundamentals. This is our office and just some of the things that we do. We provide a great environment for entrepreneurs to develop. We bring in outside experts and mentors. Some of our alumni will come and talk about what it's like to be an entrepreneur, as well as surrounding our teams with mentors so that they are not going it alone. What is the program? It's a 13-week full-time business accelerator program here in Boulder, Colorado. It's mentorship based. We have 2 programs essentially. One is a structured program that every company goes through. There's weekly themes, whether it's marketing or sales or HR or venture capital, right? That we're gonna focus on for 1 week at a time. And every team goes through that. But there's also custom programs designed around each company's specific objectives. So if they already have a product and customers and they need to raise capital, we can focus our energy and efforts in that direction. If the team is still developing their product and wanting feedback from industry participants, we can help that as well. If the team really is struggling to get their brains wrapped around their pro forma and what that means to their business today, we can dive in there. So it's a pretty comprehensive thing. Some people compare it to an MBA on your business. So like I said, there's a theme curriculum. Each week we have assignments and resources that we put in front of the teams, supported by a large roster of mentors. At the end of the program, we have demo days and investor previews, but on the run up to that, we're going to have a lot of one-on-one meetings with the teams in addition to everything else that we do, pitch practice, stand-up meetings, mentor and education sessions. We're going to host community and investor community events because we feel strongly that it takes a village for companies to do it right and get a lot of feedback so that when they go out and pitch, and this is a view of our weekly pitch practice here in the office, they're going to be ready to answer the questions and they will have been there and done that with the ideas and concepts that investors will ask about their business. In addition, we have a partnership with the Arcview group, and we've had that since we were founded. They're the largest investor forum in the industry, and we are like a early stage company startup factory, right? So as we produce companies and take an investment in these companies, and they graduate from our accelerator program, we got a partnership with the Arcview group to help make sure there are investors there waiting and interested in what they're doing. At a very high level, what do we look for? I mean, at the end of the day, it's all team, right? This is a startup industry. There are even the billion-dollar MSOs are startups, right? And the quality of the team is going to guide their success, right? There's a lot of things that a team can control. Controlling those and making the right decisions is critical. Okay. Next up, let's talk a little bit about the market. And this data is mostly from BDS Analytics. Again, one of our first investments in the cannabis industry back in 2015. Fantastic team, great traction, becoming the dominant resource for the industry. You know, you're going to hear this a couple times: trust but verify. Trust but verify. And one of the best ways to verify any company's claims is to go straight to a third-party resource. And BDS Analytics is the leading resource for data in the cannabis industry. We've got some background noise. I don't know if Bob or Celia on the team can help mute those. But what we're talking about here in this cannabis industry, in the greater cannabinoid industry, is a generational wealth opportunity, right? On par with the gold rush, the end of prohibition, right? And despite headwinds like 280E, IRS code 280E, restrictions on banking, limits on advertising and social use, the industry is still growing at nearly 30% every year. The tide has turned. 2/3 of Americans now favor making marijuana legal, up 5.5 times since they started tracking in 1970. And even at the federal level, the government is inching towards legalization. Somewhat unexpectedly, the federal government legalized hemp and CBD as part of the Farm Bill in late 2018. So you got to stay on your toes. You got to understand what the trends are in the industry and prepare your investing wisely. But the cannabinoid THC is still federally legal, and this causes all sorts of trouble in the industry, specifically around IRS code 280E. This article published last week on Seeking Alpha does well to present the current situation that many MSOs or multi-state operators are facing right now. Really quickly in sum, these licensed businesses are, in the simplest terms, leaky buckets. Because of IRS code 280E, which taxes them on their gross profit, not their net profit, because they operate in a federally scheduled area, right? A Schedule 1 drug, they are very rarely profitable. So the MSOs are losing money in the businesses that they're in. That, with the capital markets tightening, declining stock prices, some down 80% from their highs just from last year, means that MSOs, multi-state operators, are finding themselves between a rock and a hard place and having a moment in the industry. I encourage everyone who's looking at investing in a licensed business to look at and read this article. You know, our thesis at Canopy Boulder from the beginning is that businesses that help these licensed businesses grow faster and work more efficiently, meaning spending less on expenses, will get to profitability sooner and bridge to that next day. So great read. Okay, so what's the data telling us? The data is telling us that the global market for cannabis, THC cannabis, is growing, right? It's going to double between now and 2022. When you break it down geographically by the global market, it's very clear that the place to be is in the United States. The majority of sales are coming from and will come from the US market in the near and long term. And in the US market, the cannabinoid industry is highly disruptive. Just look at some of these industries that are feeling the high or low of the cannabis market. And if you think this is just a niche thing, just understand that CBD, cannabidiol products legalized in the Farm Bill are expanding into all these mainstream retailers. In fact, I went to the gym this morning and they had CBD for sale at the check-in desk. And then I stopped by the local bookstore and there were 10 CBD brands for sale next to the best sellers. And when I grabbed my coffee, right, I could pay $2 more to add a shot of CBD to my coffee, right? So this is becoming ubiquitous, omnipresent. And when we think beyond THC and just CBD in all sales channels, US sales are projected to hit $45 billion in 2024. That is larger than the organic food market. about the same size as the entire sneaker market. Are you wearing sneakers right now? And this should inspire any investor to consider investing in the cannabis industry. A rising tide is said to float all boats. You got to make sure that boat is seaworthy and not leaky first. And that's what we're talking about here at on this webinar. So, but if because of all of this, you think you could blindly throw darts and hit a bullseye in the cannabis industry, consider this as just an example. We received more pitch decks and investment inquiries from domestic CBD suppliers than ever. Folks growing and processing, but you have to ask yourself, why is that? Is there a reason for it that isn't the grand CBD opportunity? This is just some data which details how the wholesale pricing of CBD, full spectrum oil, THC distillate, and CBG isolate are trending, and they're not up and to the right? Really and truly, a comprehensive, disciplined, and extended due diligence process is one of the few ways an investor can help mitigate risk per the Kaufman Foundation, and essentially avoid the grand facepalm. All right, so let's get into it. First question, how do you generate deal flow? Great question. How do we do that? Our recommendations. The Arcview investor forums are, again, the leading cannabis industry investor forums in the world. And I would strongly encourage you to go online and consider becoming a member of the Arcview group and attending their events. They have one coming up in February in Los Angeles, and one even sooner in Las Vegas at MJ BizCon. Angel.co, Angel List. Per Angel List, there are over 1,500 companies in their database that you can just quickly search and learn about. Canopy Boulder and other investment groups host investor days, right? So with every one of our accelerator cohorts, we're going to run multiple investor events online, in person, all over the country. So if you want to engage with that, you can. Like I said, MJ BizCon, the largest trade show in the cannabis industry in the United States, is in December in Las Vegas. They're hosting an investor intelligence conference, which I will be speaking at. And I encourage you also to attend that if you're interested. I think we have some discount codes that can help you get in at a discount. LeafWire, another online resource where you can go on and sort through and read about all sorts of startups. Sometimes it's just about searching meetup.com, right? 160,000 members and 550 groups around medical cannabis around the world. And that's Meetup, but then there's groups like Event High, and this is full disclosure, one of the Canopy San Diego companies that has all sorts of very current and updated events for you to plug into as well. Locally, you'll find events like the CS Summit at Cultivated Synergy down in Denver, which just happened recently and we spoke at and some of our companies presented at, or even Canna Angels, right, in the San Francisco area. But the most important thing is to show up and be present, right? We all know this, that there is nothing better than firsthand experience, looking people in the eye, shaking their hand, hearing their pitch to understand whether or not this is something that you want to get involved with. So that's how we believe you can generate good deal flow and get access. If you don't feel that is something, you don't have time to show up, again, I would encourage you to look at investing in a professionally managed fund out there that's focused on the industry. Okay, so you found a deal, a couple of deals, and you're kind of curious and you want to dig in. What do you do? First step, we want to get the pitch deck, right? And do a pitch deck review, look at the founders, try to understand whether or not the valuation is within market ranges. How do you do that? You got to have some data, right? And we have some good information on valuations that for ancillary companies that are tied to monthly recurring revenue, because, you know, with 106 companies in our portfolio, we understand where those numbers are. And then with ancillary or with licensed businesses, I mean, the valuations are all over the map. In Colorado, licensed businesses are trading hands for one-time sales, and that's a very free and open market. In other markets, we hear about licenses selling for $65 million and they haven't even developed, or $7 million. So it's really all over the map. Getting your reps in and understanding what those valuations are key. And then you have to ask yourself, do you want to invest more time based on this cursory first review? Okay, and if the answer is yes, and I wouldn't spend any more than 30 minutes on this, right? You got to be mindful of your time here, because you got to look at a lot of deals to find the ones that you want to invest in. But I would spend about 30 minutes on this. If you do want to do a pitch call, schedule about an hour. I encourage you to have them pitch to you and have a checklist. Are they covering these 13 points, right? Do they know what the problem is? How big it is? Do they have a solution? Do they have any traction, or is this just idea? And is that traction betas, paying customers, revenue, profits? What are you looking for from a traction standpoint? That's going to help de-risk the investment for you. What's the team made up of? Are these people that have a right to win? Do they have experience? Have they done this before? Have they raised money before? Have they returned capital to investors before? How experienced are they, and how eyes wide open are they coming into this space? Also assessing the team, make sure you're avoiding hubris and arrogance, right? If we had $1 for every entrepreneur and investor that came into the cannabis industry that thought it was going to be a piece of cake, because it was just an industry of quote unquote a bunch of stoners, right? We'd be billionaires. There are so many people that spool in and spool right out when they see how hard it is. Does the company have a go-to-market plan that is smart and efficient, and it's something that is achievable? Does their financial model make money? How are they going to make money? And is this something that you see as realistic, right? Check their assumptions, make sure they're not out of line. Are they asking for the right amount of money? How are they going to spend that money, and on what timeline? Do they have a grand vision, right? Is this something that we see as an industry need, not a want? Do they understand the competitive landscape, right? Often companies won't present that, but they should have a very nuanced understanding of the competitive landscape. And if your understanding of the competitive landscape is better than theirs, that's a signal, right? And then do they have 3 compelling reasons to invest? Like really simply, boom, boom, boom. What is going to get you and other investors over the hump, and can they crisply state that? So if they pass that test, and you're comfortable with what they presented in this sort of cursory review, let's get strategic, okay? In our second review. So we have a mentor, his name's Rick, and he worked at GE, and he brought in what we call now Rick's 6. So the next review is more strategic. Can they crisply state this problem? Can they identify who has the problem? Is the problem, importantly, top of mind for that person who has the problem? Or is it a fire they're just letting burn, right? Because it's not important. Does that problem need to be urgently solved, right? This gets into the want versus need, right? You need to have payroll, right? You need data to make better decisions. Sometimes you don't need that new bell and whistle that somebody's pitching. It's a want, not a need. Do these people want to pay to have it solved, and does the solution work? If you can answer these 6 and it passes muster, then continue to move forward into the next set of analytical questions. The go-to-market. We found that it's sometimes hard to go to market selling into licensed businesses if you're an ancillary products and services company, and even if you're a licensed business, your delivery or your dispensary, right? There's things, it's not as easy as you think. Just because you build it does not mean they will come, right? You can invest in a grow that's hyper efficient, but if you're not planning ahead and setting up contracts with buyers of your biomass, like good luck, right? You might have some biomass that's sitting and aging, and time's not on your side. If you're a brand, right, and you don't have the proper licenses or distribution strategy, right, you can build the greatest product, but that doesn't mean that dispensaries or consumers are going to want to buy it. And if you buy a dispensary, set up a dispensary, but it is not an optimal location, remember there's limits to advertising, right? So you want to be at First and Main, okay? So that's definitely something you want to think about. For ancillary, can you partner up with another company that has a large base of customers that's non-competitive and work together through essentially affiliate relationship, going to market faster? Second, is there a mode? Is there anything truly unique about this business? This is going to be something that's team-based, technology-based, right? Flavor-based, or have some sort of geographic, advantage, right? Even a limited license state, that can be a unique and special thing, right? You've carved out a mode because the state's only going to issue 25 licenses, but buyer beware. Sometimes I say the real drug in the cannabis industry is tax revenue, and it's very difficult to convince a state and local representative that they shouldn't issue more licenses and bring in more tax revenue. Next thing, how much money is in the bank, right? Whose side is time on? Are they running out of money? Are you going to be the investor who's putting a Band-Aid on this thing, right? Or is the money that you're going to invest going to give them, and maybe with other investors that are already committed, going to give them enough runway to find success? And then, are there any previous investors with disruptive rights, right? In investing, there's economics and there's control provisions that are the most important. So make sure you understand those, and it can be buried deep in an investment document, but you wanna get involved with a company that doesn't have any sort of like odd overhangs or investor rights that are going to limit the company's ability to find success. And then try to be objective, right? Eliminate bias as much as possible. And one of the ways that we do that is we get into the spreadsheet and we start rating teams on a scale of 1 to 5. These are the 5, or actually 6 categories that we will rate each company we're looking at on a scale of 1 to 5. They're weighted. Team is heavily weighted. Traction is heavily weighted. Their ability to raise, our assessment of their ability to raise more money is more heavily weighted. And that gives us a number on which to compare opportunity to opportunity. If they pass that second review, let's talk about going deep into due diligence. All right, so time to make some calls. Due diligence is not spending hours on your computer searching online, right? Again, show up, be present, build out your network, hear from people. Reference checks, right? You want to do reference checks, and what you're trying to do is profile these founders, identify, any weaknesses or areas where they're going to need to have higher end complementary skill sets. Background check, very simple, right? Go online, run a process, find out if there's anything that is going to be a gotcha down the road. Financial review, right? Don't make an investment without looking at historical financials and the pro forma, and making it very clear that you're comfortable with the business model. A legal review, good governance. Have they been holding board meetings? Are they up to date with all their legal filings that they need to do? Fifth, if it's a licensed business, are they in compliance? Is that license in good standing? Or do they have liens or something coming down the pipe? I mean, reaching out, all this data is publicly available. If you can search it out, you just need to make sure you go through a check there. We always like to call their advisors and their other board members. And if there's any previous investors, reach out to them and understand, hey, you invested, how did it go, right? Did they hit their milestones? They're obviously pitching that they were going to use this money to hit a certain milestone. Did they do that? Do they have a good track record? And then, call their customers, ask to call their customers. You don't have to call all of them, right? But you want to talk to a few to understand what they're doing right and what they're doing wrong. You can learn a whole lot by picking up the phone. And finally, trust but verify. This is BDS analytics data, right? You hear that they're the fastest growing edible in Colorado. You know what? Ask them for data to prove that. Get the data from BDS analytics, right? Make sure that you are not going to be the one investor who doesn't verify the claims that the company is making. Now you're almost done. And so let's get into the last ones, right? The beer test. This is not, can they drink a lot of beer. This is, do you want to spend time with them, right? Would you be excited to grab a beer with this founder and spend an hour, talking about life and talking about business? A lot of investments now last longer than the average marriage. So you need to make sure you want to spend time with this person and that they want to spend time with you, right? Some of the gotchas that we found can creep up on you. Non-compete agreements. If this is a person who's done a lot of things in the industry or in other industries that or in other niches that are similar to the one they're launching in, make sure that they are free and clear, right? No non-competes. There's no debt on the books. We've seen entrepreneurs, in lieu of taking a salary, make accrue debt for their compensation on their books, right? Make sure that there's nothing hanging out there that's gonna weigh down your ability to get a return on investment or scare away investors in the future. IP assignment, so intellectual property assignment is very key. You want to make sure that IP is has a clean license to the business or is held by the business, and it's not something that when push comes to shove, a founder is going to hold as an asset and is not going to be an asset of the business. And then finally, if they have had previous founders or previous employees that were part of this, that those employees and next founders have signed released forms, because if your investment hits it big and this is a unicorn moonshot, then guess what? Those former employees and founders that are no longer with the business, you got to believe they're going to be making a call and saying, hey, remember I mowed this, I mowed that. So you got to make sure that if you make it over the rainbow to the pot of gold, that there aren't hands in the pot that you weren't modeling for. All right. And if you're still not sure, phone a friend, get a second and third opinion. This is where you're networking with other industry investors, experts, professionals is key. If you're still not sure, find a sell side or buy side investment banker who does M&A in this sector and call them and see if what this company is planning to do will pay off in the future. Bankers are transactionals. They understand what buyers want, and you can sort of start with the end in mind by calling an investment banker and verifying that this is a good one to go after. All right, so that's the process. Let me talk to you a little bit about how this has been put into play here at Canopy Boulder, right? So obviously the accelerator is a 13-week process. We're doing a month plus of due diligence on these teams. We're going through this process I presented. But there are also investing in companies that we know, right? So Weller is a CBD infused snack and beverage company that we've invested in outside of our accelerator, more of our VC arm. And this is a company that when the two founders were starting up, they came by. We found space in our office for them. They're serial entrepreneurs in the natural and organic products industry. They know everything about bringing a product to market that one should, and they know all the people to help them get there. But we had them in working out of our office and getting to know them for months before we made that investment. Another company, Asia Horizon. This is a business that's developing hemp and cannabis investments operations in Asia. The idea for this came out of a conversation that we had with the founders. And we saw a grand opportunity to develop a global supply chain for CBD, hemp-derived CBD in China. And the founder had a specific skill set to do that. And we could actually add value and bring some capital as well as resources to the table. So for 7 months, actually, I think it was more than that, we had been engaged with the team at Asia Horizon to develop their business model and help them along the way before we made an investment. And it's paid off already. Asia Horizon was the first North American company to win a license in China for hemp to process, distribute, sell, export and import products into China, one of under 15 licenses that have been awarded. So they have something truly unique and a great team to pursue the opportunities in Asia. All right, gosh, and that went fast, faster than I thought. So here we are at the Q&A. I'm going to open up the Q&A and let's see if there's any questions. So the first question is, can we get a copy of this? Some of these points are great, and I can't write that fast, right? I understand. Yeah, we are going to, we're recording this webinar. We're going to send the webinar recording out to everybody that signed up. One of the questions that we get a lot is, you know, can I do this by myself? And, you know, when we meet investors, we ask a couple key questions, right? Have you made angel or early stage investments before? You know, in private companies, do you understand what's going on there? That's a yes, no. Have you made investments in cannabis, right? And why are you choosing to invest in cannabis? How committed to it are you? You know, investing is, you know, not really a part-time endeavor, like entrepreneurship is not a part-time endeavor. So, and you know, the chances of hitting a home run on your first up at bat are very slim. Repetitions and reps is something we talk about with all of our teams, whether it's pitch practice, right, or talking to customers, or developing new businesses. You get better with more experience, just like the Beatles playing their music in Germany, in, you know, the bars. They need to get you need to get reps in to be able to make better decisions. And there's a lot of nuance and subtlety in the cannabis industry. It really makes sometimes understanding timing and market demand critical. So that's why we encourage you as an investor to think about building a network, or engaging in one that already exists and learning from that network as you are making investments. So one of the questions that came in is, can you talk about exit strategies for some of the companies in the early funds from 5 years ago, or exits in general? Yeah, absolutely. You know, early stage investing, you know, you need to model out 5 to 10 years for exits. And you know, you're not looking to get a 20% return, right? You're looking to get a 10x return. So that takes time. And the best companies that, the highest performing companies in Canopy Boulder are not even at that 5-year mark, but companies like BDS Analytics, Front Range Biosciences, work that does payroll processing, right? They are doing exceptionally well and continuing to grow their valuation and develop their market. And in the right time, we know that they're going to make the right choice and make an exit. A lot of the thinking around investments in ancillary products and services is to sell to either publicly traded companies that are rolling up businesses in the ancillary products and services sector, or selling to a mainstream company in that same line of business, right? So a BDS Analytics might sell to an IRI, a Nielsen, or some other large mainstream data player who is going to wake up. Now they're all paying attention to cannabis. We know that in the cannabinoid market, but when they decide to get into the business and someone in the board or in the executive suite says, we got to play in this market, they're going to make a decision between building and buying. And we know that these large companies on the outside in the mainstream are not the best at innovation, and they will more likely buy their way in than try to build a service in competitive way with the leading companies already in the market. It's just faster to get to market. With licensed businesses, you know, it's really interesting. Again, valuations are all over the map. We've seen a wave of consolidation from the multi-state operators and even Canadian licensed producers who have cash rolling up and buying licensed businesses left and right. And sometimes they're overpaying, sometimes they're getting a fair deal, sometimes they're buying licenses that haven't been developed. I mean, their businesses, they're spending some people are spending $7 million on a license, right? That isn't even developed. And, you know, it's hard. It's hard. You know, it's like a game of Monopoly right now for a lot of the Canadian LPs and MSOs, right? They're trying to buy up all these squares with the hope that down the road, money is going to come back for them, right? So that's been happening. We think that's going to slow down, or at least the valuations are coming down. But you know, the next wave of consolidation is most likely going to come with either the passing of the Safe Banking Act, right, which is going to open up all sorts of new financing options for the acquirers, or a full legalization. Can we make introductions to founders raising capital? Absolutely. Celia Daly, who runs investor and community relations for us at Canopy Boulder, is a master at understanding investor needs and understanding which companies are raising capital and pairing those two groups up. So if you're interested, please do reach out and we can help you get involved with deal flow. Someone said you mentioned Arcview. Do you have connection with 730 and Micah Tapman as well to share deal flow? Absolutely. You know, we've worked really hard to build up relationships with all the other venture capital firms and focus on the cannabis industry. Obviously, we have a lot of companies that need to raise capital, but you know, like we said from the beginning, you know, it's hard to go it alone. So make sure you're partnered up with folks who are experienced and active in the space. And that can include venture capital firms. I mean, you might want to invest in that firm and then have some money left over to do co-investments with. But that's one of the ways you can tap in there. Arcview, again, the world's largest investor forum in the cannabis industry, a lot of deal flow, a lot of events, and we work very closely with them as partners. Let's see here. We got a question. How do you evaluate tech and IP in the space, as well as pharmaceutical pipeline companies raising money? You know, the best way to do that is to call in experts who know more than you, right? So tech and IP, certainly, you know, in the early stages, it's important to have, but there's got to be a plan to get to a place where a company can defend that technology and IP, right? It's not worth anything if you can't defend it. Somebody can just run you over and leave you like roadkill in their dust, right? If they have more capital, more resources, and you don't have money to compete with them, right? So we like experts. We like to see tech and IP. But if you have an IP strategy and we ask a couple questions and it's clear that you as an entrepreneur have not thought about that in any great depth, it's not really valuable, right? And then with pharmaceutical pipeline companies, you know, that's again an area where we see a lot of pitches from entrepreneurs with very, very, very high valuations. Getting to a pharmaceutically, an FDA approved drug is not something you can do with angel capital, right? You're going to have to raise a lot of money, right? And you have to have a team that has resources to and a track record of raising a lot of cash. So, you know, just buyer beware there, understand what their fundraise roadmap looks like and where they believe they're going to be able to raise capital in those later rounds. Because there's a limited number of resources for larger amounts of capital that don't come with very strong control provisions, right? This is a high risk industry. You know, investors are not giving up tens of millions of dollars without certain control provisions and measures to make sure that the company stays on the straight and narrow. Okay. And if you don't have experience in pharmaceutical product development, you have to ask yourself, you know, who does in this round? And if there aren't people in this round that are pharmaceutical investors, like, why are you looking at this in this deal? Are you going to be holding the short straw at the end of the day? Another question, what are some of the biggest legal and legislative issues on the slate for 2020? What should we be watching? You know, the Safe Banking Act, I think, is probably the easiest place to go to there. You know, but I'll be honest with you, it's, you know, people ask all the time, when are we going to see federal legalization? And our answer is sooner than we all think. And the reason for that is that everything from a legalization standpoint has happened faster than we ever imagined in this industry. So, we're looking at and paying attention, but, at the end of the day, a lot of these big changes happen Friday night at 5 p.m., right? And you have a couple days notice. Honestly, like the Farm Bill, legalizing hemp and CBD, that was not something many people in the industry predicted until, 6 months out, right? When Mitch McConnell sort of realized that hemp was a great product for Kentucky, and that, if he was going to want to win re-election in Kentucky, he's going to need to do some things to consolidate goodwill behind him, right? And that drove, in many ways, the legalization of hemp and CBD at the federal level. So you probably should divorce yourself from what should happen and what's the right thing to happen, and think more about how do we make it happen, right? What are the interests from specific people that have control over the votes and the conversation, and how do we get that passed? Let's see. Those are those questions. Let me talk a little bit about reps. So, and valuation, right? We have a very clear understanding of valuation, and it's because we've made 130 plus investments in the cannabis industry. And unfortunately, a lot of the press releases and valuation information is hidden, and it's not public. So how do you get a perspective on what the valuations are? You've got to get in the market, and you've got to have some reps. You got to spend time with entrepreneurs, hear where they're at, look at their metrics, and see what they're asking for, and stay with them to understand what the term sheets are and the documents are going to say, right? In investing in cannabis, entrepreneurs always feel like there should be a premium because it's cannabis, and there's that 30% growth rate out there, and they believe a rising tide floats all boats. But cannabis is a high risk investment category, right? And we're starting to see this with the MSOs and the stock prices. They go up, they go down. Investors always want a discount because of that risk profile. And there's that golden rule: she who has the gold rules, right? So the investors are driving valuation. And if you look at those public markets coming down, that's one of the obvious indicators for where valuation sentiment is going in the cannabis industry. It's not going up and to the right. For licensed businesses, people ask, how do I diligence a licensed business? Carefully, right? Very important is understanding rules around license transfers, right? And how long that takes. We've heard stories of folks who have waited 6 months to get a license transferred from one entity to another. When you get into the licensed business, you need to model in a significant cushion. If you're investing in a company that has just won a license, right, in a new state, you need to model in and think that there are probably going to be people that did not win a license that are going to sue the state and the group in the process, try to highlight the process where they got the short straw, right? They should have been due one. And it happens now in every state. I mean, back when we started Canopy Boulder in 2014, they were just issuing license in Massachusetts. It's taken 4 or 5 years for these businesses to come online because there were legal challenges right away. We saw the same thing happen in Maryland. Litigation around the award of licenses is becoming the norm, right? So model for that. You need to also model, like we're learning in California, that cities and county governments, if there's a provision in the laws that they need to approve of these licenses, think about I compare it to getting a building permit, right, in your city or your county. that can be one of the most painful processes any individual can go through. And that comps well to a lot of local processes around getting licenses, local licenses awarded, and the okay from cities and counties to build out your grow or your extraction facility or your dispensary. So be very careful there with grows. Understand the price trends, and that that wholesale price declines in virtually every cannabis market. We see cultivators starting out with high prices per pound that they can sell, and that goes down. We do see some stabilization in some sectors, but by and large, the trend is down to the right. If you're not seeing that modeled out in a pro forma for a cultivator, you need to ask questions, right? If you're not seeing in any licensed business a strategy or at least an understanding and provision for IRS Code 280E, ask questions. If you're seeing a business that you're investing that has 15 LLCs in an effort to, overcome IRS Code 280E in what is essentially an LLC's shell game, understand that is like shooting fish in a barrel for an IRS, for the IRS, right? An auditor who's going to come in and say, no, that's not going to fly. This LLC is privy to the license. They're all connected. So let's redo those financials and make sure you're paying the man your fair share. Dispensaries, one thing to consider with dispensaries is that they're probably the hardest hit by IRS Code 280E because they have high rent and high employee costs that they can't deduct, right, when they're calculating their taxes. So as opposed to a cultivator where a lot of the expenses of the business are costs of goods. So understand that as well. If you're investing in a brand, is this brand have its own manufacturing? Do they have a contract manufacturing partnership? Are they focused on marketing and sales? Are they focused on innovating new technologies? If the brand is coming out with, like the example we constantly heard about was water-soluble CBD, and we started hearing about water-soluble CBD like it was the new white sliced bread about 3 years ago. But, in the functional food, dietary supplement industry, that technology is like so old, right? They've been taking oil-based ingredients, lipid-based ingredients, and making them soluble in water for a long, long time. So the innovation, though presented as innovative, and the products that are presented as innovative were just sort of no big deal, right? And I think, so just question everything, trust but verify. Let's see, another question we have in, how much runway do the companies typically have, cash flow and capital to keep the doors open? What do you budget to reach sustainability? So that's a great question. So when you get to the slide and the part of the presentation where the company is talking about how much capital they're raising and how they're going to use those funds, two things, general rule of thumb, you want to see 12 to 18 months of runway with that investment. Right? And you may not be able to fund all that, but the group of investors that are also coming in for that round, you want to see that money is going to take that company 12 to 18 months, or at least it takes them to the next milestone, which is going to trigger a higher valuation and appeal to the next round of investors. Like, this is very, very important, right? You're investing in a business and they've got to move the ball down the field, right? And they eventually want to get into the end zone. Now, frankly, it's easy sometimes to feel like you're moving the ball forward as an entrepreneur, or entrepreneurs feel like they're moving the ball forward, but you've got to be, as an investor, very clear that when they say they've moved the ball forward, there's a calculation that translates directly into a higher valuation. You want to make sure they're spending money in ways that are making your investment and the business more valuable. And how you determine that, again, mostly through repetitions, but you should always ask, what are the KPIs, right? Key progress indicators that they are tracking that are translating to a higher valuation. And it's a real sniff test, right? Can they connect their traction to a higher valuation. If they can't, and you can't get there simply, quickly, and clearly, you probably need to think twice about that investment. So we're coming up on the hour, and I don't see any more questions in the queue. So I'm going to wrap things up now. I want to thank everybody for being on and being part of this presentation. This is for you. And if you have any more questions, we encourage you to reach out to us at Canopy Boulder. You can go onto the website. Down at the bottom, there are a couple forms that help you get engaged in what we're doing here at Canopy Boulder, maybe as an investor, as a mentor, or even an entrepreneur, right? So our model is to be very open and help people that want to be into the industry, because we believe very firmly, strongly, that every day, more and more people get involved in the industry. And when that happens, we get closer to legalization, right? So with every company launched, every company helped, with every company invested in, we are making legalization possible and realistic and closer to today. So be a maverick, get engaged, show up, be present, and join us at Canopy Boulder in building the cannabis industry of tomorrow. Thank you.